I think the one thing that Columbia Care has that is, a bit unique is the footprint, right? And as we continue to sort of go deeper operationally in the markets where we have that presence, as we roll over into the new retail experience, Cannabis across the country, launching these brands that have just been incredibly well adopted and sort of welcomed by our communities. I think we just continue to see that lift. So the growth is incredibly exciting. I think a lot of it has to do, again, with sort of sweating the assets and continuing to expand in the markets that we have that footprint. But I'd be lying if I said that the brand launches and the retail changes hasn't had a pretty significant impact on it as well.
My next guest is Jesse Channon. He's the Chief Growth Officer of Columbia Care Inc., trades on the CSE under the symbol CCHW, and in the United States under the symbol CCHWF. Jesse, welcome.
Thanks so much for having me, James.
Hey, Jesse, your company's sort of like one of the most dynamic ones in the entire cannabis space. I was pleasantly surprised to see that your revenues have really taken off. Your last third quarter revenue, $132.3 million, increase of 144% year on year. What is happening? What is driving all this growth?
Man, I mean, great question for the Chief Growth Officer. I should probably have a pretty good answer here. Look, I think it's a number of things, right? We're coming off an incredibly interesting last 12 months, right? Obviously with the COVID and the pandemic, buying patterns, everything that we saw. But I think the one thing that Columbia Care has that is, a bit unique is the footprint, right? And as we continue to sort of go deeper operationally in the markets where we have that presence, as we roll over into the new retail experience, Cannabis across the country, launching these brands that have just been incredibly well adopted and sort of welcomed by our communities, I think we just continue to see that lift. So the growth is incredibly exciting. I think a lot of it has to do, again, with sort of sweating the assets and continuing to expand in the markets that we have that footprint. But I'd be lying if I said that the brand launches and the retail changes hasn't had a pretty significant impact on it as well.
Sure, you bet. Okay, well, so tell me about this relationship with Mike Tyson. We had Mike Tyson's 2.0 CEO on the show last week. Yeah. And so it was really intriguing to me that Mike had this Tyson Ranch brand previously that was aligned with some other of our companies that we follow, Planet 13, and now he's over with you guys. So that's a completely new thing.
Yeah. So, it was a really interesting opportunity, right? Chad Bronstein, who's the CEO and co-founder over at Philo, is a friend and someone who we work with incredibly strategically at Columbia Care from a Philo point of view. And he had gotten involved in helping to sort of orchestrate that relaunch for Tyson. And, we were talking one day and, just sort of catching up on the industry at large. And we were talking a bit about Tyson. And, we threw it out there and said, hey, would there be any interest in national cultivation and manufacturing sort of level partnership? And there was obviously a lot of diligence and a lot of research that we needed to do on our side in order to feel comfortable, right, with that alignment and with that brand. And I had the opportunity to speak multiple times in person and one-on-one with Mike and with Adam, the CEO who you had on the show, and others. And we just felt like there was an incredibly authentic conversation that was being started around a lot of the things that Mike is very passionate about and sort of plant-based medicine and how he attributes that to many of the changes that he's made in his life. And our mission at Columbia Care, historically we've been sort of known as the medical team, right? But our mission has always been very much to improve patients' and customers' lives, right? So we put plants in the ground, and our job is to get them into the people's hands that need them. And we felt like there were a lot of conversations that Mike was able to start and a lot of people that he was able to reach that historically have been a difficult segment to impact in our space. And so we were really keen to align with that team on national cultivation manufacturing. So that's where we're at, and we're launching products in a number of states. I mean, Colorado's coming online end of this week. We've got a handful of states and markets that'll follow it almost immediately between now and call it end of the year. And and it's something that there's a ton of internal excitement around. So it was just very lucky sort of coincidence of the way it was being launched.
Sure. So then your strategy is based in large part on acquisition, and some organic growth as well. So is the Tyson brand going to be sort of internal to Columbia Care, or is it sort of a licensing agreement?
No, yeah, it's its own brand, right?
Okay.
So, we've been very fortunate. Organic growth at Columbia Care, we were in a position where we won an enormous amount of licenses as far as those vertically integrated markets organically. And then we had the sort of luxury of acquiring in some great operators and brands into the portfolio over the last year and a half or so. But with the Tyson sort of alignment, that's very much, its own brand, its own company, its own entity. And we're just going to help to power it, right? We're going to help to ultimately give it the scale that it needs to get across as many markets as quickly as possible.
Fantastic. All right. So then some of your other developments here that are really interesting. You're the first U.S.-based company to win Platinum MarCom Award. What is that all about?
Yeah, well, I mean, it's humbling, right? Because I think any of these awards where you have sort of a jury of your peers or people, colleagues that are ultimately weighing in and helping to sort of determine that, those to me are the most important, right? And the most impactful. And I think with MarCom, what we saw with MarCom, the Platinum Award that you're referencing was for the Cannabis, so the new retail experience that we launched. It's in a handful of states and markets right now. We'll be, I think, around 80 locations that'll be flipped over the next 12 months or so. We'll exit this year with about 25 or so cannabis locations across the country. It's just a great new aesthetic. It's a great new experience. It's very technology driven, like the thing that you see behind me here, these light boxes. Forage as a proprietary system. Actually, Forage won a gold MarCom for mobile buying experience, right? And we're the only US-based cannabis operator to win in both of those categories. And we're not by nature, right? We're not a technology company or a mobile buying company, right? We're a cannabis operator, a vertically integrated operator. But we saw some opportunities to really invest and lean in experience. And so what you see with Cannabis, what you see with Forage as an ability to sort of search and find the best products that are a fit for your life, those are just gaps where we saw the ability to say, okay, we sort of have a responsibility to lean in and try to innovate here and create something better. And it's like I said, it's incredibly humbling to have, third parties recognize that work for the team.
Right. Okay. Switching gears a bit now to your financial performance. The holy grail of the cannabis industry and one of the toughest aspects, the toughest bars has been profitability, just plain old profitability. Now, your financial metrics as reported are, eye-popping. They look fantastic, yet much like all of the companies who are reporting some form of profitability, the word adjusted EBITDA, adjusted gross profit, is sort of persistent. So I'm always trying to understand, when does just plain profitability enter the picture, where it's just good old-fashioned GAAP profitability with no adjusted bits?
Yeah, look, I'm going to be honest with you. I am probably not the expert for your show to weigh in on financial, right? They keep me arm's distance from it, I'm sure, as it is anyway. But I mean, the reality is, fair question. I think that we struggle with a couple of things in our industry. I think that consistency and normalization to be able to sort of compare things apples to apples is a big one. So a lot of what we do from a reporting point of view, I think, tries to provide a level of consistency with the way that other operators speak to and report to their financials and sort of the norms that have been set in the industry, so that investors and partners can look at that from the outside and say, okay, I feel good about where this is trending based on the way that others are reporting. We're moving to ultimately U.S. filer status, at some point, I believe in next year is what we've said publicly. And so I think that'll help to normalize even further, right? As you talk about GAAP versus, IFRS and all of the other sort of mechanics that exist there. So, it's a long-winded way of saying we're just trying to be consistent with what we think the sort of market accepted norms are right now with that concept of adjusted EBITDA. And I think you'll see more and more normalization to those things as we move to GAAP.
Sure. There's been increasing sort of buzz and rumor about federal deprohibition of cannabis. is that one of the key factors that will make the difference between, extreme profitability and marginal profitability?
Yeah, I mean, I think that there's a number of things that can change over the coming years. That it's pretty much all upside for the most part, right? For us as an industry, it allows us to serve more people, more customers and patients. It probably takes a bit of the strain off of some of the financial things that we see today with regards to taxes and other aspects of that. It allows us, with safe banking and other provisions, to be listed in domestic exchanges like New York Stock Exchange or NASDAQ. All of those things, I think, ultimately impact some level of the sort of financial health of organizations in our industry. I think that what you're seeing is that there's not a whole lot that people agree upon at 70% plus in this country, right? And definitely not at 90.
Right.
Cannabis reform is one of them, right? Like, I mean, we have a hard time, agreeing on just about anything at this point right now. But cannabis reform is one of them. It's got overwhelming support on, a wide sort of spectrum of individuals across states. We see the Republicans now getting incredibly involved with, what Representative Mace has presented, Congresswoman Mace, and the language in that being, more on the state side versus some of the other larger things that we see with Schumer, Booker, Wyden in that bill. But at the end of the day, it all comes down to the fact that normalization is coming, right? I mean, cannabis acceptance and reform is coming, and so I think it's a matter of timing and in what we see as far as phasing, or if it's all at one time. But there's no question that those larger sort of macro regulatory changes will have significant impacts on our industry and our company.
Sure. To some extent, from an external perspective, it looks like it's a war of attrition in the industry. In most markets, it seems like there's just too many players and there's too much cannabis, and especially there's still a pretty significant representative contingent coming out of the black market. So it looks like the companies that are still going to be there by the time this full regularization and legislation comes through are going to be the real beneficiaries, and then that's when the profit margins are going to start to rise. But when do you think that's going to happen?
Oh man! So before I get to any sort of crystal ball and get myself in all sorts of trouble with the team internally, the only thing that I would say to that is, look, I mean, depending on what metrics you look at or what reports you buy into, the one thing that we know is that this market is going to be exponentially larger in 5 years than it is today, right? So if we're a $20 billion industry today, as far as, legal regulated cannabis, and that's moving to 60, 80, 100, I mean, take your pick, right? It's a multiplier no matter what. It's not an incremental. And that doesn't mean that our current customer set is going to consume 3, 4, 5 times as much cannabis a year, right? It means we don't know 40, 50, 60, 80% of our customer base yet. And so I think that when you look at some of these markets where you do have, a sort of bumper crop situation where you've got a lot of product right now, or you've got a highly fragmented supply chain with a lot of retailers or a lot of producers, we still have a lot of growing to do as an addressable market and as a demand. So I think that there's still plenty of wins for everyone, right? Not just the large companies that will ultimately sort of, make it through, to your point, some of the volatility and consolidation, all of these things that typically happen in these markets. But there's great brands out there. There's great operators out there at a single state level that I also think are going to have a lot of success in their future. As far as the crystal ball, when does this all change? No chance I'm weighing in on that. I would say, I mean, it's sooner than later, right? Like at some point, there's got to be some incremental steps that are taken to where we see sort of advancement, whether it's with safe banking, which is pretty universally sort of accepted on both sides of the aisle. Obviously there's a lot of work that needs to be done with regards to social equity provisions and making sure that there's an opportunity for success in such an incredible growing industry for a number of individuals and operators and people starting, startups in delivery and technology and all of these things. So, I mean, it's not going to be months, right? I think it's going to be years, if I'm being honest. But I don't think it's way out in the future. I think it's sooner than later.
All right. Well, so you have the Yogi Berra school of thought that says it's okay to make predictions, just don't say when.
That's it. Listen, hey, there's a reason he was so universally revered, right?
Exactly.
I think
Exactly. All right, Jesse. Well, it's great to talk to you, and I really look forward to having more of these conversations in the future. Thanks for your time today.
Thanks so much for having me, James.
You bet. Bye for now.